Okay, welcome traders. This is how I trade the Russell, and I just want to show you a few things that I look at. Take a look at the dailies. I'm kind of pointed out a head and shoulder here. That's just, since I only trade it for my positions for a few hours, a daily isn't as important as what I consider the hourly, which is here. I've identified supply and demand zones and put the weekly highs and lows in here just to have a reference point. And I try to tie this 60-minute in relation to my 15 minutes. So I'm looking at everything from left to right, from 1 over to 2. Here I have my continuous 15-minute chart with floor trader pivots from TradeStation, and down here is my .d. And I just think that on different days, price kind of respects different charts. Is continuous or the .d, and that's my job to determine which one it's going to respect. And that kind of relates to everything that I'm talking about. Most of these strategies work about 65% of the time, and when you tie in a different chart, then you have I typically add another 5%. So let's say this is 65% over here on my 60 minutes. I'll add another 15%, making that like a 70% probability because of price action on this chart and what it's doing in relation to the floor trader pivots. What I have down below here is my advancers and decliners and my tick chart. These have little significance in my trading, but I like to see them, and they're like a confirmation if I see price coming up to these pivot points like R1 here, and and I'm in an overbought situation on this tick, or that we've come up to the higher levels, the 1800 to 2000 level on this advancers and decliners. That pretty much narrows down this monitor and what I'm thinking at. And as I go from 1, 2, 3, and 4, I move my focus over to a 5-minute .d chart. I have the continuous chart behind it, but I'm mainly focusing on the .d chart. I'm looking for gap fills. I'm looking for swing highs and swing lows defined by these green lines are Globex or yesterday's highs, and the dotted red line is Globex lows, and the solid is yesterday lows. So just by definition, they are swing points. So I look for that. You can see how price came back and reverted to yesterday's highs and took back off. Now, if I could get something else to some confirmation on that, such as the pivot points or anything to that nature, I will it'll be a higher probability trade for me. So that's typically. I also have my 50 moving average, which is always the white line. The green line is my 200. This bluish colored line is my 20 moving average, and I just really consider the trend, what the 50 moving average is doing. So you can see from yesterday, shortly after the open, it's been an uptrend, and now it's kind of just leveled out to a flat line. And these candlesticks are important, but you have to consider what it's doing on the larger time frame, because these 5-minute candlesticks could actually be a wick on a 15-minute candlestick. So it's always nice to refer to the larger time frame when trading. Now I'm going to move over to my here's my 377 tick chart. This chart is a beautiful chart. I love it dearly. It keeps me in a trend, and as I typically think a 2-point range is just chop, and once we get to 3 points, then that could be a start of a trend. And that is why when I'm trading, I trade 4 contracts and I take 2 for 2, meaning 2 points for 2 contracts, and then I let this chart here define my exits. It's real simple. As you can see here, I'm counting waves, and if I was in this trade, this would be the first retest to this 50 moving average on a downtrend, and that's determined by this stochastics that I set at a 524, I believe. It's rather fast, but this is a 377 tick chart, and so this is the first retest. In a trend, there's typically, you can count on, you know, probabilities that there's going to be 2 retests. Anything after 2 or wave 5 is a chance of exhaustion. And then this is a fine example. It took an extra wave here, but we have the first retrace, the second retrace, which were both good entries, and the third. This is lower probability because the trade usually exhausts by this time. But what we've seen here, and also in the 5-minute, was that price came down to yesterday's highs, and this was a good area. We can see in the chart below that we've got Scott Hunt's Bollinger Bands, and we got a signal here too. So this probably kicks up my probability that I would like to go long. I didn't take this; I was done for the day. But in hindsight, everything looks great. But in reality, all you had to do is wait for price to come out of this zone, break this 8 moving average, and be long. And then we've got our first retest. And if it wasn't Friday, this could, and it still could be, a start of a new trend. A trend defined by this moving average here, the white moving average, and that's very key in my trading style. I like to keep things pretty simple. I like to use the 60-minute for supply and demand zones. The time of day is important. Half hour after the open is the first reversal, and the second reversal is an hour after it opens. I feel that if it comes into like levels like this at that time frame, it just gives me a little bit more confirmation to take that trade. Mostly if we're hitting floor trader pivots, the tick chart, the advancer and decliners, or we're coming to my 5-minute Globex for yesterday high zones. It's all not exact science. It's just able to take that risk, stay in there, know that typically if I get in above this 8 moving average, then I'm going to use the candlestick's lows. I like it with wicks in here because it really gives me a confirmation that sentiment of that price is rejected, and puts me in for a nice technical stop. This also gives me a good technical stop here too, but on a tick chart you usually don't get the wicks that are as well defined as you do on a minute chart. So these are some of the things that I'm aware of. This is how I trade. I usually trade the first 2 hours. I'm looking to get in my comfort zone. I'm looking to get let's see how I can say it in points. I'm looking to get about 5 points a day out of it, and because I scale out, it's isn't really $2,000 though per trade. So it's hard to define. It's you take those chances, they materialize or they don't, and you look for the gaps. And now I just need to end this. See if I can get that done. Oh. Sorry about the delays here. Let's see if I can get this ended. Usually it's just F8, but seems not to be doing it this time. No, I don't want to. No. No. Stop.